That whole period, I should have just been long and have made more money. And that made me ask a question of
Buy the
myself.
dip. Buy the dip.
That asked the question is like that dumb meme of buy the dip. I wanted to go all the way across the bell curve, go to the middle bit, arguing it all, come to the other side, and realize that buy the dip was actually the single best strategy to have ever existed over this period of financial mess.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discusses Bitcoin and crypto. Bitcoin traders anticipate a potential price increase for Bitcoin in September, but have been cautious in their actions. With the potential for reaching a significant milestone by the end of 2024, Bitcoin remains on course for a breakout in September. Simus Crypt Trader Destroyed Capital informed their 483,000 followers on July 30th that Bitcoin did not manage to break out of the reaccumulation range. This range is a period where buyers accumulate in anticipation of further upward price movement in the 100 days following the Bitcoin halving in April. However, it was always unlikely for a breakout to occur on July 29th, which marked 100 days after the April halving. On that day, Bitcoin traded only 2.11% higher at $66,343, according to CoinMarketCap data. Currently, it is slightly below that at $66,800. Some traders believe that Bitcoin is more likely to surpass the $100,000 mark in 2025 rather than in 2024, as previously predicted. This prediction is based on a higher time frame. The Bitcoin chart appears to be quite promising in my opinion. In a recent post, pseudonymous crypto trader Don shared their perspective on the current state of the cryptocurrency market. According to Don, their analysis aligns with that of Will Clemente, the founder of research firm Reflexivity Research. Both Don and Clemente believe that the quarterly chart of Bitcoin is showing remarkable growth, as highlighted in a post on July 30th. I believe achieving a six-figure income this year may be premature, but I have a strong belief that we will reach that milestone sometime in 2025. This confidence stems from the positive macroeconomic factors and the inclusion of cryptocurrency trades. In the previous cycle, we reached a peak of 69K, so a value of 100K would only be a 1.5x increase from that previous all-time high. When accounting for inflation during that time, the increase is even less significant. Therefore, I consider a target of $100,000 to be perfectly reasonable, given the current state of the world and the crypto space in the short term. According to Dan Crypt Trades, there is a particular price range between $70,000 and $74,000 that has been consistently rejected in recent months. It is likely that we will witness a significant surge in value once BTC manages to surpass this range. He included, according to M. Greenspin, the founder of quantum economics, the chart clearly indicates a range between $55,000 and $73,000 that has been in effect since March. Currently, the market is testing the upper limits of this range. According to Greenspin, a member of the wider crypto community, it is believed that the recent Bitcoin push by former United States President Donald Trump will have a positive impact on the price of Bitcoin. This push is expected to help Bitcoin break out of its extended consolidation phase. It seems that my prediction at the beginning of the year, which suggested that this cycle would be driven by nation-state fear of missing out, FOMO, is now starting to come true. Greenspin, and lots of things Raoul Pal discusses, so please watch the video to end, and share this video and subscribe our channel, Everyday Finance. Thanks!
Me was actually the opposite, because I was the macro bear, that everything reverts to the mean, that it was all terrible, and it is all terrible. And I realized I had the wrong mental model. And the moment I actually freed myself of my own biases and tried to understand what the fuck was going on and why were these assets going up, why was this happening, I then could see what was going on and what the big game was. And as soon as I could see that, it became a game I could make money from. And that I didn't have to be stuck wishing, and I've seen a lot of friends of mine do this, wishing that value stocks or small caps or whatever it is are going to work for them. And it's been 20 years now. And I've realized I had the wrong mental model. And the moment I changed it, I felt liberated because the world kind of makes sense. And I just urge all of us to just make sure that we don't get obsessed by our own mental models, because they will change. And the world changes, and sometimes we can be dead wrong, and sometimes we can be dead right. I mean, I nailed the financial crisis, I nailed the European sovereign crisis, I nailed COVID, I nailed all of these things by being a big bear. And something I suddenly realized is, yeah, but assets kept going up. That whole period I should have just been long and have made more money. And that made me ask a question of myself.
Buy the dip.
That asked the question is like that dumb meme of buy the dip. I wanted to go all the way across the bell curve, go to the middle bit, arguing it all, come to the other side and realize that buy the dip was actually the single best strategy to have ever existed over this period of financial mess. And I was stupid for not seeing it. So anyway, I'm just saying, be careful, because Tom, I can see that you're so allured by the black hole that is there. It kind of comes to you. And we have this conversation. I try and pull you back from the black hole and say, yeah, it's there, but there's an opportunity here. And you're like, but the black hole. Just be careful of the mental model, because it will massively restrict you in what you do, even how you think about life and how you interact with people around you. So it's something I've learned the hard way, is we've all got to be a little more open to A, everyone's opinions, and B, our own biases and how ingrained they are. And have they become part of our personality just because it is? Or it's part of how we fear. Like, some people fear risk. So they become a certain way and present that to the world around them. Or some people have made money and then they're worried about losing it because their family didn't come from money. We're all set of our own human ridiculous biases. So we should just all, in all of these conversations, just step back a little bit.
An analyst specializing in Bitcoin believes that the introduction of spot Ethereum exchange traded funds, ETFs, may have been premature and could potentially carry some risks regarding the price of Bitcoin. According to Charles Edwards, the founder of Capital Investments, the absence of new capital entering the market raises concerns. He believes that the introduction of a new Ethereum ETF will only divert the attention of investors who are currently invested in Bitcoin. Institutional BTC ETF holders may feel the need to diversify their portfolio by purchasing the new ETF. However, without new flows of capital into the overall market, this could potentially create selling pressure on Bitcoin. According to Edwards, ever since the spot Bitcoin ETF was launched on January 11th, it has seen an increase of approximately 17.53%. The dominance of Bitcoin has remained relatively stable, with a slight increase of 0.07% in the past 24 hours, as reported by TradingView data. On the debut trading day of the spot Ethereum ETF, there were net outflows of $78 million. However, the following 2 days have seen inflows of $44.5 million and $31.1 million, respectively. Let's back to the Raoul Pal interview.
Earlier, and it was a very good question, is what would make you think the opposite? And we all need to be able to do that. Because we can't keep saying, well, asset prices have gone up, so therefore you don't know whether you were right or wrong. It's like, and this is no attack on you or anything, it's me thinking through this stuff, is how do you know that maybe you have done yourself a disservice, or I've done myself a disservice, or Tom is doing himself a disservice by thinking the way that we do? Have we held ourselves back? Have we lost an opportunity cost that we didn't imagine because we're so anchored in what we think or we project to other people? That's all I'm trying to get across. It's not about who's right, who's wrong. I'm saying at a human level, what happens if you had bought Bitcoin and bought the NASDAQ and were 10 times richer than you are today? Would you care about some of the things you think about now? Maybe not. Tom, if you hadn't made money when you were young and then fear losing it, maybe you wouldn't be worried about the black hole. Maybe you'd be more risk-seeking. Maybe, just think about it in a bigger context than fighting over what price an asset is. We need to ask ourselves why we think that. I think that's really interesting.
Yeah, the regulation.
But Peter, sorry, I just want to ask you a question. What is the end, the worst case scenario game? What is the thing that you fear that we are supposed to be?
Well, the worst case scenario is we destroy the currency completely, right? And so the dollar has no value.
Okay, let's assume that happens, right? Let's say we do that, which we've been doing, but slower. But let's say it completely goes.
But it hasn't got. There's a long way to go between where we are now and zero.
Okay, so let's assume it goes to zero. I'm long crypto and technology stocks. You're long gold. They all go up. We're fine. What's the fucking problem?
Well, first of all, there's a big problem because a lot of people. First of all, maybe crypto goes up, maybe it goes down. There's no way to know. But
explain to me what I'm fearing here myself.
When the dollar, because you're wiping out the savings of a generation, you're wiping out the retirement of tens of millions of people.
I thought they were in debt. Mm-hmm. You told me they're all in debt. So we're wiping out.
Yes, you're wiping out debt. But every time you wipe out one person's debt, you wipe out somebody else's asset.
Okay.
You wipe out the value of people's pensions, their insurance.
You said earlier that you wanted the big reset, that we should do this.
And when the money is worthless, you can't buy things with it. The farmer doesn't want to give up his food because you have nothing of.
Donald Trump has come to appreciate the potential of cryptocurrency, which is a positive development regardless of one's opinion of him. While I don't align with former President Donald Trump's policies or his overall vision for the United States, I must admit that there are potential benefits for the crypto industry if he were to win the election in November. It's not surprising that there is a solid chance of that happening, given his strong support in Pennsylvania. Without dwelling on this too much, it's fair to say that the Biden administration hasn't been the most favorable for crypto. It's quite uncommon to witness a piece of technology being criticized as extensively as it has been during the Democratic Party's time in power. Banks are feeling apprehensive, regulators are taking a strict stance, and the progress of adoption has come to a halt. However, there is a possibility that Trump's election could bring about significant changes in a relatively short period of time. I won't dispute that Trump has always been pro-crypto, a quit goal search will display from January 2019, when during his first term in the Oval Office, he was quite explicit in not being a fan of Bitcoin and other cryptocurrencies, which are not money and whose value is highly volatile and based on thin air. Fast forward to July 2024, and he's scheduled to speak at Bitcoin Nashville in June. He had a meeting with Bitcoin miners behind closed doors with the intention of creating a US monopoly over the industry. The winds are shifting, and crypto needs to piggyback on the political cloud that is now unexpectedly sitting at the table. Even if Trump doesn't change a single crypto policy, just putting the handbrake on the prosecution would be huge for our industry. It would end the crusade, give banks some slack in deciding who they want to work with, and open the floodgates for mainstream adoption. America has generally been antagonistic toward crypto. Now, however, the last point of feudal resistance might fall with this potential shift in the political landscape. Crypto providers should be prepared. Sure, this is undoubtedly an integral part of his campaign to win over voters, but the timing could not be better. BlackRock, the world's largest asset manager, currently holds over $20 billion of Bitcoin and assets under management. This significant increase in holdings can be attributed to the approval of the Bitcoin ETF in January. Additionally, BlackRock will be participating in the Nashville conference, where momentum is building. It is encouraging to see that both corporations and politicians are actively supporting and promoting the growth of Bitcoin. It is beneficial for the crypto industry that Trump supports it. Regardless of our opinions on his policies, it is important for us to pay attention and adapt to the political landscape. In order to onboard more users and achieve mainstream adoption, we have realized the need for regulations and cooperation with traditional institutions. Instead of fighting against anti-crypto efforts, we should concentrate on expanding the industry. Therefore, it is crucial to ensure compliance and work closely with compliant banking partners. Collaborators, get ready for an upcoming surge in the market that could surpass your wildest expectations. The convergence of politics and crypto sentiments is becoming increasingly intertwined, whether we embrace it or not. This fusion has the potential to unlock a new era of crypto adoption and exponential growth. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.